Hi everyone, welcome back to the channel. In this video, we are going to talk about the hidden cost of ownership and the endowment effect. There is a silent force that keeps you poor. It isn't the market, it isn't inflation, it lives entirely in your head. We all have that one ghost in our portfolio. That stock is deep in the red. That investment that makes you wince every time you open your app. You know you should sell it. Deep down, you know it's dead money. But you don't click the button. Why? Because of a psychological glitch called the endowment effect. This means we value things more simply because we own them. We think our assets are special because we chose them. We think our research makes them more valuable than the market price. But the market doesn't care about your feelings. The market only cares about price. To be a mindful investor, you have to see through the fog of ownership. So here I'll share a personal story about a microcap disaster. I know this is painful personally. I wasn't always this clinical about my exits. Let's go back to 2015. I found what I thought was a hidden gem. It was a microcap company. They were a real estate developer, but they had side business in textile trading as well. I ran the numbers for weeks. I built complex cash flow models. I was looking for deep value, and on paper, it looked like a steal. The entry price was low, the assets looked solid, but I made a classic beginner mistake. I fell in love with my own spreadsheets. I didn't actually understand their moat. I knew nothing about their management team. I did the deep research only after I had actually bought the shares. But for 4 long years, I watched that stock plummet. Every single day, I hoped for magic. I hoped their textile business would expand. I hoped their new real estate projects would boom. Neither happened. I was a prisoner in my own conviction. The endowment effect told me I was right and the market was wrong. So now let's try to understand a little bit more about the pain of loss. Why didn't I sell? Because of loss aversion. Science shows that the pain of losing money is twice as powerful as the joy of gaining it. If I sold, I had to admit I was wrong. If I sold, the loss became real. Eventually, I bit the bullet.
At a loss.
I sold at a massive loss and claimed the tax loss harvesting. But the lesson followed me into physical real estate. In 2014, I purchased a residential plot of land in India. It has been over a decade. In real terms, adjusted for inflation, I'm still losing money every day. It is a high-ticket item. There are no customers. The development I expected in that area hasn't happened. It is an emotional anchor that stops me from moving my capital to better places. So, how do we break the spell? We need systems, not willpower. Rule 1, the fresh start question. Imagine your worst stock vanishes from your portfolio right now. The current market value is put into your bank account as cash. Would you take the cash and buy that same stock back today? If the answer is no, you must sell. Don't wait for a bounce to get back to even. Free your capital. Free your mind. Rule 2, the 3-point kill switch. Before you buy any asset, write down 3 specific reasons to sell. Don't say, if it goes bad. Be precise. I will sell if the CEO leaves. I will sell if revenue drops by 2 quarters in a row. I will sell if the price drops 20%. Decide the exit before you feel the love of ownership. This bypasses the pain of loss. So in conclusion, investing is not a math game. It is a temperament game. The market exploits your love for what you own. Mindful investing is about being cold. It is about admitting when the story has changed. Don't let your ego bankrupt your future. Go look at your portfolio today. Ask the hard question. Is it a strategic asset or is it just an endowment? Let me know in your comments which stocks you're struggling to let go of. Let's help each other stay rational. I'll see you in the next one. Thank you for watching.